Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. The president spends his weekend threatening new tariffs, and investors bet it may be more bark than bite.
And our country's making a lot of money.
Another noisy story in D.C. Will there be a new Fed chair named while the current one is still on the job? Kevin Hassett, one of the president's top economic advisors, could be in the running. He tells us where he stands on central bank independence.
I think that we definitely need to rethink the way the Fed's acting. We 100% want independent monetary policy, but it sure looks like they need more congressional oversight on things like the way they built their buildings.
And where tariff policy meets monetary.
The Federal Reserve should be independent. The president has the right to voice his opinion. And the bottom line is that the Federal Reserve has been very, very wrong on this tariff issue.
Plus, the rest of today's news that got us squawking. Bank earnings kick off this week, and is a breakup brewing at Kraft Heinz?
By the way, ketchup, a great business. Why ketchup is such a great business, I do not understand.
You're going with the catsup instead of the ketchup.
Ketchup. I said ketchup.
The ketchup.
It is Monday, July 14th, 2025. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernen and Andrew Ross Sorkin. Yay, we're all here. We're happy.
It's like the halfway point of the summer, isn't it?
July
15th? Is that what?
The question is really, when do you think this?
June 21st.
No, it's the 14th.
When do you think the real summer?
Right, you're not just June, July, and August.
But if you just do June, July, and August, it's July 14th.
Yeah, but my kids don't get out of school. Didn't get out of school till
So
like
it'll
June
be
25th,
Christmas,
so it's
like
starting.
it'll be Christmas next week. Basically, it'll be Black
rate.
Monday. Black Monday is coming up this Monday.
At this rate.
Black Monday. No.
Or Black Friday.
We want this to
No, we don't
stretch
want
for as long as
Black Friday. Not
we want this
Black
to
Monday was
stretch as
another
long as
thing.
possible.
Yeah. Right.
We're enjoying the summer. We're just getting into it.
Pouring in, we have tariffs pouring in at levels that we have never seen before, and they've only just started. That's really a small portion. It's mostly from cars and aluminum and steel, a little bit of lumber. But they'll really start in about another week, and then in about a month they'll come in at levels that are extremely strong. And our country's making a lot of money.
President Trump raising trade pressure on Mexico and the European Union. That took place over the weekend. Megan Cassella joins us now with the latest on where all of this really stands. Where are we?
We are right in the thick of it, Andrew. Good morning, guys. So 2 new warning shots fired to those 2 trading partners this weekend. The president vowing to impose 30% tariffs on all of their exports to the U.S. as soon as August 1st. Now, we did hear Mexico's President Claudia Sheinbaum and the head of the European Commission, that's Ursula von der Leyen, both vowed to continue negotiations with the U.S. in the hopes of reaching a deal by early August. But von der Leyen also warned that the EU will be ready to retaliate with their own tariffs by early next month if the president moves forward with this threat. Now, this follows the president's threats against Canada on Friday, and then given the duties he's already imposed against China this term, take a look here. All 4 of the U.S.'s largest trading partners, together they sell about 60% of everything the U.S. buys from abroad. They are or will be facing tariffs of at least 30% by early next month if all of this holds. The question, though, does remain whether these will actually be imposed in a few weeks or whether they're a negotiating tactic. Here's what Kevin Hassett said about that yesterday.
These tariffs are real if the president doesn't get a deal that he thinks is good enough. But, conversations are ongoing, and we'll see where the dust settles.
The president later in the day addressed the same idea, and he said when it comes to these deals, guys, the quote was, "Maybe I'll change them, maybe I won't." Guys.
Well, but that's been sort of the story the whole time. The question that I have is how much leverage does the president have at this point? And does the other side or these other sides call the bluff if you think it's a bluff?
Yeah, it's an interesting question. I mean, very clearly, the first response by all of these countries, most of them that we've seen now over the past week or two, has been to say, well, we're going to keep negotiating, because by doing this in tandem with extending the deadline, maybe he's raising the stakes slightly for some countries from where they were, but it wasn't moving too much except to emphasize he's saying now, I really do mean this, and we have to get it done by August 1st. So they feel the deadline pressure. They are there negotiating, but repeatedly now from major trading partners, we've heard that their national interest still comes first. They'll retaliate if they have to, even though they recognize the White House wants to move higher if they do that. So they know what's on the table now. It's all been laid out there, but they're still holding firm and saying that doesn't mean we're just going to give you everything that you want at this point. I'll also say what he is doing, though, that's very serious, even though these country-specific tariffs are kind of on hold, we do know the sector-specific ones are moving forward. That makes things a little bit more grounded in reality here, or starting to have an impact. We heard about copper and potentially about pharma last week. We know there are 5 other of those investigations ongoing, so you have to kind of look at all of it at the same time.
Hey, Megan, there's these reports this morning that the EU's van der Leyen may be reaching out to Canada, to Japan. I don't know what exactly that would mean, if they're talking about retaliating together or if they're just looking for other strategies, potentially other markets for some of their goods. What's the potential there?
Yeah, that's a great point, actually, that's the other impact here. Just the uncertainty alone, whether or not these tariffs ever take effect, is we're now hearing from a number of trading partners about strengthening their relationships around the world. That was Canadian Prime Minister Mark Carney's first response when they got threatened on Friday. We also heard it from von der Leyen over the weekend. She was celebrating a new trade deal with Indonesia. They're mostly looking at, as far as I know, at strengthening their relationships with each other, not as sort of a unified response by all of them. They can all, impact U.S. markets individually, so they don't have to ban collectively for that. But they are trying to boost their own trading relationships so that when if the U.S. stops buying as much from any of them, they're already looking elsewhere to buy and sell goods. Brazil and China is one example we were talking about last week with the steep Brazil tariffs. Canada and the EU and Indonesia, all of these other countries getting closer together, even just because of the uncertainty with the U.S. They feel like they can't plan in advance. They don't know what things are going to look like a month or a year from now.
Okay. Megan, we're obviously going to be watching this so very, very closely. And we are going to be speaking with Kevin Hassett. So many questions for him. Joe.
Yeah, unfortunately, economists are getting more bullish. No, maybe they'll be right. But, recession, at this point, recession risk seen cooling. Inflation also seen cooling at the same time. So the stagflation combo, not only are we not seeing that from the tariffs, these.
And is your comment that if the economists start to think that things are actually good, that actually is probably bad?
I wish they felt the way they used to. But you're going to start seeing, and we already saw some of it, you're going to see President Trump start to say, not only did it not hurt things, the tariffs, he's going to start saying that it actually is helping things. All the money that's being raised right now, and it's billions and billions of dollars. If there's no inflation and if the economy is chugging along, and you know what's going to be key, and I don't know what's more important, what these companies say, and we're going to get it this week. We're starting with the banks.
Yeah.
Right.
What they say about maybe we don't see any really bad effects like with the economic numbers yet, but we're going to see what their outlook is and what they say. Is that more important, or do we just, with bated breath, wait for every inflation number and every labor
I
number?
think earnings.
Earnings is going to be good.
Almost by default, you'd have to think it's inflationary. The question is whether the economy is so good that it's absorbing, if you will, the inflation. And then the second piece is so much of the stuff that was brought in the country was front-loaded, and whether we do hit this new wall later. I don't know the answer.
It's not August 1st. Most of the tariffs aren't in. They're definitely higher. But as far as why we haven't seen inflation yet, everybody talks about shelter. Shelter was such a big part of inflation, and that is cooling off drastically. And then you got oil prices that have stayed below 7. So you could see, theoretically, that could have been transitory the first time. And we were headed for 2% anyway. Maybe we were, because it was all supply chain related and COVID related. So maybe this whole...
Now it's transitory.
Maybe this whole obsession that Jay Powell, and maybe he's still fighting last year's back. That's why, we'll see. We'll see what happens. The economy looks good. I don't know if I'd cut. You just because you don't want to save dry powder. President Trump again criticizing the chairman. The president spoke with reporters after arriving back in Washington last night from the Garden State.
Well, I think if Jerome Powell stepped down, it would be a great thing. I don't know that he's going to, but he should. Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't.
Vice President Vance also slamming the Fed under current Chair Powell. And this was an X post, Twitter post yesterday, responding to a post from economist Judy Shelton. Vance said that, in his words, the Fed has been totally asleep at the wheel. As President Trump says, they're too late, both in fighting inflation during the Biden administration and then in lowering rates now. National Economic Council Director Kevin Hassett says the Trump administration is looking into whether it does in fact have the authority to fire Powell. Meanwhile, the Fed has a new frequently asked questions page up on its website with some information about the $2.5 billion renovation project of the Fed, the facilities that has drawn criticism from the Trump administration. The page directly responds to some of those critiques. For instance, it mentions that the project is meant to renovate 2 historic buildings that haven't been significantly updated since back in the 1930s. One thing we found out, I thought people should have led every newspaper and article about when we had this Treasury Secretary on. The food's much better at the Fed.
He can say that when he goes to breakfast
the food
with
is much
Powell
better
every week.
Why wouldn't it be? I mean,
Although,
print some more.
No, look.
Let's have caviar. Doesn't cost anything.
I've eaten at the Fed.
You've eaten at the Fed.
I've eaten at the Fed, and I've eaten at Treasury.
Which is better?
I think they're both pretty good.
I don't know. At the Fed, you get those gold flaked hamburgers that they make.
It's not like that.
That's not what's happening with this.
It could. If you wanted to, it's just that we don't have any gold flake because Fort Knox is empty.
Shares of Kraft Heinz in focus this morning. That follows a Wall Street Journal report late last week that the company is planning to break itself up by spinning off a chunk of its grocery business into a new entity that could be valued at up to $20 billion. According to the report, the remaining company would house sauce brands like Heinz ketchup and Grey Poupon mustard. Kraft Heinz was formed in 2015 after Berkshire Hathaway and Brazilian private equity firm 3G Capital combined Kraft Foods with H.J. Heinz. Those shares are down about 60% since that deal. You can see they're up by about 1.7% this morning.
I mean, when you think about that, big deal, everybody
Did
thought
not work out.
Did not work.
Yeah.
By the way, ketchup, a great business. Why ketchup is such a great business, I do not understand.
Because you need it on everything.
You're going with the catsup instead of the ketchup.
Ketchup. I said ketchup.
Ketchup, yeah.
Ketchup, but ketchup. Heinz ketchup, huge
business. There you
business.
go again.
Why?
Well, it's catsup is one spelling of it.
Catsup.
C-A-T-S-U-P.
But the question is why that brand is, you can have a huge margin on ketchup.
Yeah.
But then everything else
not so
is
much.
so complicated.
Yeah, well, it's a lot of the packaged foods.
Right,
that
all the
people aren't
packaged
eating
food stuff.
anymore. Yeah,
that
or
nobody's
they're
eating.
eating less of,
Right.
I should say.
Meantime, we were watching shares of Tesla this morning. Earlier this morning, Elon Musk responded to a user on X, which asked Tesla investors if they support a merger between the car company and Musk's XAI. Musk responded no to that. Responding to another X user yesterday who said Tesla needs to be able to invest in XAI, Musk said, it's not up to me. If it was up to me, Tesla would have invested in XAI long ago. We have a shareholder vote on the matter. And over the weekend, the Wall Street Journal reported that Musk's rocket company, SpaceX, has agreed to invest $2 billion in XAI. On Friday, Musk knocked down a report that XAI is looking for up to a $200 billion valuation in its next round of fundraising. Musk said XAI is not seeking funding right now. We have plenty of capital, but a lot of this was sort of the speculation driven in part by the fact that XAI is now on the actual Tesla system. So you can actually get access to that. Now, separately, the team behind Musk's AI chatbot Grok issuing an apology. This after the bot made an anti-Semitic post on X, a statement on Grok's X account apologizing for, quote, the horrific behavior that many experienced. It attributed the offending post to a code update separate, though, from the language model that powers Grok, and said the code in question has been removed.
That's clear as mud.
Cheese will be next.
Coming up on Squawk Pod, he is supposedly vying for Federal Reserve Chairman. National Economic Council Director Kevin Hassett joins us from the White House North Lawn, the independence of the Fed, and the impact of President Trump's tariffs.
Most people expected that if there were going to be a price effect, that it would be front-loaded before the U.S. supply chains adjust and more production is done into the U.S.
Stick around. The man who might end up in charge of our central bank is right after this break. This is Squawk Pod from CNBC.
Up and Becky, Q.
You're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernen and Andrew Ross Sorkin.
Now to the New York mayoral race. Multiple reports saying that former New York Governor Andrew Cuomo expected to announce plans to stay in the race as an independent, with an announcement coming within days. He reportedly is going to be asking all the candidates except for Zohran Mamdani to vow to drop out of the race if they are not in the lead by mid-September to avoid splitting votes. Now, the report says Cuomo will make that pledge himself. Of course, we had the mayor on our broadcast just about a week and a half ago now, suggesting that Andrew Cuomo should be the one who should step out of the race. Clearly, if any of them are going to give Mamdani a run for his money, if you will, one of them has to step out of the race. And right now, if you look at Polymarket, if you believe that that's a decent indicator of where things stand, Mamdani looking at over 71% right now. And the other guy's down to like 14,
about
11%.
Adams, it's a tough climate. A lot of people are deciding to back him, and there is some momentum. He's in what high teens or so.
I saw 14.
Okay.
I saw 14
really
and
high,
for him and 11 for Cuomo. I don't know what the latest and
Well, even
greatest is.
combined, that's not.
It doesn't do much.
Yeah, it's crazy. You expressed you missed National Donuts Day. Was that when was
Apparently, National Donut Day was in early June. I want to say it was like June 8th or 9th.
Where were you? Because you
I
never
don't know,
miss that.
because I never miss it.
You never miss that.
I'm not sure.
Today is Bastille Day in France when they stormed. There's a lot of other ones. If you miss National Donut Day today, you give another chance. Today is National Nude Day.
National Nude Day.
No, thank you.
Nobody needs that.
No.
You know what else it is? It happens to be National.
Speak for yourself, my friend.
Yeah, exactly. Hey, I'm looking better nude.
I don't want to see either of you.
Okay, but it's also National Be Nice to Bugs Day. Don't kill me fry.
Nice.
But I will trade
National
you.
Be Nice to Me Day.
I'll trade you one National Nude Day for one National Mac and Cheese Day.
I'll take that.
National Mac and Cheese Day.
Today.
You can have all the national news.
That's
days.
what
I don't want any of them.
I don't want it. I'm saying. I'm at it.
Can you imagine walking around in Times
You've been to a
Square if
nude
everybody
beach?
was nude? It would.
You've been to a nude beach?
I've already been to Times Square.
Awful.
There's no
Nobody
upside to a
you
nude
wanna
beach. Maybe 1 out of 100 people should be nude. President Trump announcing an additional 30% tariffs on the EU and Mexico. Those are set to take effect August 1st. Join us now, National Economic Council Director Kevin Hassett. Great to have you on, Kevin. Hasn't been that long, but I see you a lot around, and I always wish it was with us, but we understand. we understand you've got a lot to say. I'll tell you, the thing I'd like to start with, we get so excited about pending deals when we keep hearing last time it was, I think, by Wednesday we were going to have 2 or 3 big deals, and they don't come. Wouldn't it be better to just wait or something? Why does nothing, like India? We were sure we were going to hear about India. Can you update us on that? Or maybe you shouldn't update us, because then we start getting our hopes up and then nothing ever happens.
Right. The bottom line is that there have been ongoing negotiations with numerous countries and close to final deals that when the president reviews them, he wants more for the American people. We've got a guy who's the best deal maker in history, who made billions of dollars by, squeezing everything out of deals, and he's doing that for the American people right now. And so talks are ongoing. We've got a deadline, and we'll see how things land, but I know they're going to land in favor of the American people.
CPI tomorrow, Kevin, and a day doesn't go by where we don't wonder collectively where the tariff effect is. And maybe August 1st things get more interesting, and if people don't come to the table and more things happen. But at this point, we haven't seen the negative impacts either with inflation really or the labor market of tariffs. Why is that? Is it because shelter has been a tailwind as costs come down, or oil prices? Why is it that we haven't? Is it still coming, or is it never coming?
No.
The bad effect on inflation.
You know, the biggest, most interesting data item in this place, Joe, is the fact that the CEA put out a report, Council of Economic Advisors, that showed that import prices into the U.S. are dropping, actually dropping during all this. And my theory as an economist of why that is that Americans, because of President Trump's leadership, have recognized that when they buy an American product, they not only get perhaps a better product, certainly a better product most of the time, but they're also making their community stronger. And so there's, I think, a lot of patriotism in the data. The bottom line is people prefer American products. And so therefore, the demand for imports has gone way down so much that even with what tariffs have been there, where people would say, oh, they might increase prices at least a little bit, we've seen prices going down. The other factor, don't forget, is that if we have a trade deficit year after year after year with a country, then by definition, they're supplying stuff to us inelastically. And so if you have an inelastic supplier and you put a tariff on them, then the inelastic supplier bears the tariff. I think putting it all together, we haven't seen it in the data, and it's been long enough. It's been long enough, right? We've got hundreds of billions of dollars of tariffs coming in. The CBO says that we're now, with the things that are already in place, set for $3 trillion in tariffs over the next 10 years, just about. And all of that, and we haven't seen big market responses. In fact, the market's been going up. We haven't seen inflation responses. And we've got all that tariff revenue coming in. Imagine if we had a tax hike of that scale, how much upset there'd be.
I talk about that. Yeah, I talk about that a lot. Everybody that hates the tariffs can't wait to raise taxes, but this doesn't count as raising any money. It's really, it's weird. You mentioned we have deficits, so we don't like countries we have trade deficits. We got a surplus with Brazil. And I won't say I immediately said that we shouldn't be using tariffs for all these different reasons, and Bolsonaro, whatever we're using it for, because sanctions aren't the same as tariffs. I understand that. And you're supposed to have a legitimate reason or emergency reason for it. But what about that? What about using tariffs for anything that you decide you want to do to try to modify some other country's behavior? What if people start doing that to us with things they don't like that we do?
Look, the president has made it clear that there are a couple of national emergencies. There's a national emergency with fentanyl, and there's a national emergency because of the persistent trade deficit. Look, and one of the problems with Brazil is, well, Brazil is transshipping Chinese goods. I mean, it's not a big stretch at all to think about where are the goods going to go with the sort of 50-ish% tariff that we currently have on China. And so I think the president's right to draw a line in the sand. And again, we'll see what happens with the negotiations between now and August.
Hey, Kevin, so should the Federal Reserve, hey, it's good to see you. Should the Federal Reserve be working with the administration's plans or goals, or should it operate independently?
Oh, the Federal Reserve should be independent. The president has the right to voice his opinion. And the bottom line is that the Federal Reserve has been very, very wrong on this tariff issue. They've been saying it's going to cause inflation, and they've done that while the European Central Bank has been cutting rates a lot because inflation appears, by everybody's standards, to be just about under control. And so think about it this way.
But Europe doesn't have the economy that we have. Kevin, Europe doesn't have the economy we have. We're in a much better position.
If you look at their inflation,
growth.
Oh, I'm sorry, if you look at their inflation and our inflation, it's almost spot on. It's almost exactly the same number.
Right, but we have stronger economic growth.
It's come down. Yeah, but the growth is coming from supply side effects of Trump policies, which isn't inflationary.
Kevin, I'm curious if you saw
inflation goes down.
I was curious if you saw this Goldman Sachs report last week that effectively suggested that 40% of tariffs will be borne by U.S. either taxpayers and/or U.S. corporations, 60% borne by the foreign country and whatever businesses are there. Do you buy that in terms of what math have you done, and how does that compare to what Goldman Sachs is saying?
Well, first, I haven't seen the report, but the numbers seem pretty wrong to me. The way I think about it, when you're thinking about who bears the tax, you need to go back to thinking about the intuition of it as if you're just in your economics 101 class. If I buy a candy bar for $1 and I put a 10% tax on it, then the question is, do I go in and have to pay $1.10, in which case the person buying the candy bar pays the tax? Or does the store say, oh, I'm going to not be able to get rid of all my candy bars, and so they cut it down to 90 cents and still sell it to you for $1? And it depends on the elasticity of supply in the end. Like if you have an apple tree with 100 apple trees, you got to sell 100 apples, and so the apple tree guy, he's going to bear the tax. And my view is, my intuition all along, I've said it on the show all the way back, really for many, many years, is that supply from foreign countries is pretty inelastic. So they're going to bear the lion's share of the tariff. And if you look at it, that's what's happened. That's what's happened. And so I guess economics being what it is, maybe it'll change in the future. But so far, we're really 6 months in to an experiment that's working exactly the way the economic theory I described would say.
Just one other sort of point. How do you think about a lot of the CEOs who say, look, we brought a lot of stuff into the country early. One of the reasons we haven't had inflation yet is that we sort of front-loaded the situation and that we may run into a challenging time later when we have to bring in sort of the next set of goods potentially under a tariffed regime?
Well, I think that the other argument that I've been seeing, Andrew, is that what's going to happen is that there's going to be big price effects now, but as we get more production into the U.S., then those price effects will go away. And so I think most people expected that if there were going to be a price effect, that it would be front-loaded before the U.S. supply chains adjust and more production is done into the U.S. So the fact that in the period where, in January, everybody was saying the price effects were going to be the largest, we've seen negative price effects. And so now people are speculating they're going to get worse and worse somewhere off into the future. But I think, again, the best intuition for it is that they're taking a hit, that people are exporting into the country. And Americans have recognized that their friends and neighbors are better off when they buy the products that they make.
Kevin, I think you intimated that it might be possible to fire Chair Powell. What would be? How does that process work in your view?
Well, again, we'll see how the Fed responds to this incredible cost overrun. The bottom line is, from my perspective, that when the Federal Reserve was created, we were under a gold standard, and the idea that the Fed could print money and then spend $2.5 billion on a building without real congressional oversight, it didn't occur to the people that framed the Federal Reserve Act. And so I think that we've got a real problem of oversight and excess spending. And to put it in perspective, the cost overrun right now is $700 million. The second biggest renovation of a building that we've ever had in the history of D.C. was the Federal Reserve building, the FBI building. And the FBI building, the whole thing costs about the same as this cost overrun at the Fed. And so I think that we definitely need to rethink the way the Fed's acting. We 100% want independent monetary policy, but it sure looks like they need more congressional oversight on things like the way they build their buildings.
Kevin, if you did end up in that chair, and I don't know what would cause what we saw under the Biden administration. There's people still argue whether it was COVID, supply chain issues, or all just piling on all the stimulus money when we didn't need it. Whatever caused it, under the president, would you have been able to raise rates even earlier than Jay Powell with a president that likes low interest rates so much? Do you think would you have the independence and the wherewithal to tell him you're wrong, Mr. President? We need to raise rates.
Look, I'm not going to talk about me and speculate about me being Fed chair. I'm really happy focusing on my job every day. The thing I can say is it's very important that the central bank be independent and that it keep inflation under control and that it do so with an eye on what's going on with government policy elsewhere. And so the fact that the Federal Reserve kept telling us that inflation was transitory, didn't really start lifting rates until very late in the game, that was a big policy error. And that's, something that shouldn't happen again.
I'm not saying we're in this position now, but if we were in a position where inflation was ready to come back with a vengeance, and it happened in the 70s, the stop and start, for some reason, nothing similar to that, obviously, but it did happen. I don't see how you could raise rates under this president right now, even if you need to. But with so much pressure.
I disagree completely.
Really?
I disagree completely. Really?
You know inflation's dead and buried right now. That you don't have the slightest concern that maybe there's some leftover inflation or tariff inflation on the horizon.
The notion that recent Federal Reserve policy has been highly correlated with political matters is indisputable. The fact is that there hasn't been a rate cut since President Trump was inaugurated. The European Central Bank has seen the same reduction in inflation that we're seeing since then. And right now, if you just take a normal correlation of their policy rate and the federal funds rate, then the federal funds rate today would be around 3. And that's what President Trump is talking about. And so we're talking about in the moment ideas about today. But central bank independence is crucial for the stability of the long-run economy, and low inflation is crucial. Well, the Fed failed in that job in the past, and the Fed, I don't think, will fail in the future after President Trump decides who's. If
I were Kevin Warsh, the other Kevin, the battle of the man. Kevins. If I were Kevin Warsh, maybe he is more amenable to it now. It's not about. Maybe he's more amenable to it now, but I don't know if I'd take the job if I were Kevin Warsh, because I'd be afraid that if. He's stated in the past there's times when he definitely thought the balance sheet was too big and growing too much. All the things that that hawks worry about. I don't see how you could be a hawkish Fed chair under President Trump, even if you needed one.
No, of course you could be a person who's a realistic Fed chair who pursues the dual objectives, and that's what the Fed should be doing. That's what the Fed failed to do when inflation got out of control under Joe Biden, and I don't think that the next Fed chair will make the same mistake.
Okay.
Hey, can I just go back to this point? You keep talking about the inflation here and versus the inflation in Europe, but I think the reason they're cutting rates there is not just because inflation is lower, but really because their growth has slowed down. The EU economists are looking at they just downgraded their growth forecast for the Eurozone to 0.9% from 1.3%. They're saying it's because of how the tariffs are hitting European nations pretty hard. We've got a better economy than that right now.
It was just a little while ago that everybody was putting me on the show saying how terrible our economy was because the first quarter was negative. And if you look at GDP now, it's calling for about 2.5%, 3% growth. That's certainly not overheating. But again, if we do have a stronger economy because of supply side policies, like it's not like we're printing money and mailing it to people the way Joe Biden did. But if you have supply side policies, it increases supply and it gives you growth with
Kevin, we've known each other a long time. I'm just making the point that growth there is a lot weaker than it is here. And that's why they cut rates, and that's why they put the pressure on it.
Again, everybody was telling me that we needed to cut rates because GDP was negative in the first quarter.
It might be nice to keep. You know how you build up dry powder when times are good. So when times really do get tough, you're able to cut rates. We're not that high in rates right now compared to where we were, in the last. I mean, pick your decade when rates were much higher. So being where we are, we don't have that much room. If there were some unexpected slowdown in the economy, maybe you don't think that's possible because all the other policies are so good, we'll never have another slowdown.
Look, the bottom line is the normal correlations between the European policy rate and the federal funds rate are out the window. We've got one of the higher residuals we've ever seen. And the European economy has been slower than our economy for as long as I've been following the European economy, pretty much. And so I don't think that it makes sense for the correlations to be so out of whack, and that's really the point of view of the president.
All right, Kevin, we're gonna go. That's a beautiful shot.
Thanks,
I was gonna wish you. You don't care about National Bastille Day, do you? How about National Mac and Cheese Day? I'll wish you happy.
I love mac and cheese.
Okay, but here's the question: do you want breadcrumbs on top and then it baked, or do you just like it?
No.
You know what I mean, Kevin? Where do you land on that?
No, the breadcrumbs. No, don't. You want a nice crunchy cheese on top without breadcrumbs.
Okay. What about lobster pieces? Lobster mac and cheese?
No, just cheese and mac.
It's also National Nude Day, Kevin. Should we skip that?
Yes, definitely.
See you later. That National be nice to bug. We'll skip it. See you later, Hassett. Thank you.
Next on Squawk Pod, major bank earnings kick off this week. What the results from Wall Street could tell us about our entire financial system, and some helpful TV translations.
Excrement hitting the air conditioner is always a good. You can say Shih Tzu, like a dog. That always works. The Shih Tzu hits the fan.
I should have done that next time.
You're listening to Squawk Pod. Here's Andrew Ross Sorkin.
JP Morgan, Citi, and Bank of America, just a few of the financial giants getting ready to report quarterly results. We're going to hear from them this week. Leslie Picker joins us this morning with a bit of a preview of what we can expect and what we should be looking for. Good morning.
Hey, good morning, Andrew. Yeah, those big 6 U.S. banks are up 33% on average just over the last 3 months alone. And they're set to report second quarter earnings over the next 2 days. The street is asking whether the valuations are getting a bit stretched here or whether the new numbers and commentary will catalyze further to the upside. On average, this cohort is trading at a 27% premium to its 10-year average when compared with the next 12 months projected earnings. And with the tariff, inflation, lower income consumer health, and rate uncertainty, there are still some macro risks circling the sector. Now, on the flip side, we've seen a dramatic shift on the regulatory front, with reforms expected to loosen capital requirements. Banks are expected to redeploy what's now excess capital in the form of buybacks or M&A or additional loan growth if demand is there. Additionally, global M&A volume is higher by 25% in the first half of the year, driven largely by some of those bigger deals that we've seen, while IPO volume is up 14%. Equity trading is also expected to have another banner quarter, and analysts are expecting net interest income to help bolster the bottom line this quarter thanks to loan growth. The key question is how much of these tailwinds are already priced in at these levels, though, guys?
Did you see this piece in the Wall Street Journal this morning about J.P. Morgan and Jamie Dimon and private credit, by any chance?
Yeah, private credit's obviously a huge part of this whole kind of existential question around loan growth and banking, right. And J.P. Morgan has some on-balance sheet exposure, yeah.
Should we be worried about that, though? I mean, one of the things that was so interesting about the piece was Jamie has been quite public about, I think, concerns about what the private credit world could portend in terms of, if there is a financial crisis, is that where, the risks lie? And yet the piece also suggests that J.P. Morgan wants to take advantage of that marketplace.
Yeah, absolutely. So I think there are two sides of concerns here. Jamie has been the one who's been very out front and vocal about, when SHIT hits the fan, what's going to happen? Do these private credit shops have kind of the know-how to work out situations in terms of bankruptcy? And then on the flip side, there was a report this week. I can't remember. It was from one of the big credit firms or credit ratings agencies that said essentially that private credit is safer than the banking system because it is, it has kind of longer duration exposure. You're not at risk of some sort of a bank run situation. And so therefore it's safer for the entire system. So there are kind of two sides of the coin. But banks have been, at least over the last few years or so, heavily exposed to this area in terms of their extending of credit to the private credit firms.
I mean, that excrement hitting the air conditioner is always a good.
I was like, I don't know. Can I say that on air? I don't think I can.
It's almost like saying it. It's almost like you can say Shih Tzu, like a dog. That always works.
Yeah.
The Shih Tzu hits the fan.
I should have done that next time.
Air conditioner, excrement, air conditioner is good.
I think my 8-year-old can spell that word.
Yeah, I think I got it.
Thank you.
I got it immediately.
Appreciate it. We got it.
I got it immediately.
I'm slow and we got it.
Yeah,
so there.
Exactly.
And that is the pod for today. Thanks for listening. Join us tomorrow for National Gummy Worm Day or National Tapioca Pudding Day.
I'll trade you one National Nude Day for one National Mac and Cheese Day.
I'll take that.
Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Isn't it great to have them all back together again? You can tune in weekday mornings on CNBC at 6 Eastern, or get the best of our TV show right into your ears when you follow Squawk Pod wherever you get your podcasts. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.